especially the COMEX nor the LBMA. They're not markets for physical gold and silver. They're markets for controlling gold and silver price so that they can keep the dollar king. But now that they're losing control of gold and silver, the dollar's toast. I'm not saying the dollar is finished, but it's finished as the premier reserve asset. So which currencies are going to be the premier reserve assets now? Saturday, December 27th, 2025, Monaco 64, home of alternative economics and contrarian views. So we need to talk about silver today and gold as well, of course. But yeah, a historic day yesterday, and I think it's going to become even more historic as we go along. We had silver trade up from a 71 handle all the way up to 79.30. That's where we settled roughly at an all-time high in the spot price. What's going on? Well, that's what I'm going to try to explain to you today. What, in my opinion, is going on. Well, there's a few things, and one of them that I think is really important is that the COMEX, LBMA axis, they're losing control of the paper game. The other thing that I think is happening is that the people inflicting pain on this paper game is a mixture of institutions and sovereign countries. We're going to look into that as well. And I'm also going to tell you what that will mean for the dollar as the major or premier reserve asset. Yeah, I think it's very important. Not just gold, but silver as well. People forget that up until the mid-60s, late 60s, silver was the major day-to-day, let's say, money and currency of commerce, small transactions. Gold has always been the money and currency for bigger ticket transactions, more for long-term savings. And I'll show you what I've got here because it proves to you that it's something that's been universal. This is one of my boxes with junk silver from all over the world. And these coins are not ancient. They're from the second half, mostly from the second half of the 20th century. So there you go. I think, again, there's the old saying that those who don't learn about history are bound to repeat the mistakes of history. And in this case, I think a lot of people out there who know nothing about monetary history, who know nothing about the importance of gold and silver as money, as currency, they're going to keep calling tops. They're going to keep saying silver and gold are parabolic. And I think they're going to lose out big time. So let's start with the factor that I think has been evolving because of the manipulation of silver. Not so much for gold, but more silver. Of the last 50 years, let's say, the fact that there's been, as David Jensen has said here before, endless supply of paper silver on LBMA and COMEX that has basically destroyed or kept the silver mining industry at bay. So for the last 5, maybe now 6 years, there's going to be a silver deficit. And it takes a long time, 5 to 10 years, to develop a producing mine. And therein lies the problem. And what we have now as well is aside from all the industrial demand, all the talk of this new solid state battery by Samsung, and more need for silver for everything else as well in this electrified world, and the fact that China is putting export controls from the 1st of January 2026, and China is the second biggest producer. That's a big reason why people are rushing to get physical. And it's not just for industrial anymore. I've spoken about a very good source, a very good friend that I have who knows a lot of the people at the central banks, especially in the Middle East. And according to him, they're relentlessly buying physical gold and silver, and India as well is like orchestrating the silver part. India is a huge part of that, and I think that's why we're seeing this short squeeze, and we're going to look at why this has disrupted the COMEX LBMA paper game in a minute. But from what I hear, they're not through buying the physical gold or silver. So I expect things to get even more wild, even more parabolic, if you want to call it. So what am I doing? Well, the last thing I will do is get rid of my silver for paper, because the paper game is over. And by that, I don't mean the futures in gold and silver, even though that's over as well. But fiat currency paper game is over. The world is moving more to a sane world. And the reason that's happening is that these sovereign countries are exposing the fraudulent nature, not just of the fractional reserve gold and silver market, but the fractional reserve dollar system. And that's why they're adopting this BRICS gold currency. And I think silver is going to be part of it as well, of the whole architecture. 40% backed by gold, and it's coming online very soon. There are countries already using, countries like Kazakhstan. So that's why silver is going through the roof. And what I hear as well is that these Middle Eastern countries, they were buying on COMEX, but JP Morgan was getting very upset. So now they've start buying in Shanghai, and that's why there's a premium as well, I think. They're not the Hunt brothers. They're much bigger than the Hunt brothers. These are sovereign countries, sovereign wealth funds. And yes, the blood's in the water, and the sharks can see it. So this is going to be... I think the bullion banks are on the back foot, and their paper game is almost over. So what is the paper game? Well, the paper game has really been going on for about 50 years, ever since gold was made legal again in the United States from January 1st, 1975. And silver has been part of the same scheme, of course. I've got here the WikiLeaks document that came out from 1974 talking about this, and it spells out what they do with the futures market. The futures market is not a market, or especially the COMEX nor the LBMA. They're not markets for physical gold and silver. They're markets for controlling gold and silver price, so that they can keep the dollar king. But now that they're losing control of gold and silver, the dollar's toast. I'm not saying the dollar is finished, but it's finished as the premier reserve asset. So which currencies are going to be the premier reserve assets now? Well, gold and silver. Gold and silver, you can call them currencies or money or reserve assets. But it says here, and this is from WikiLeaks, Public Library of U.S. Diplomacy, London wholesale gold dealers' views on U.S. gold sale and private U.S. ownership. I've got my Gnome of Zurich mug, Keeper of Sound Money. You can find those and others in my merchandise store. There's a link below in the description. I think you can still get 10% off. Anyway, there's a beginning summary here, and it says, the announced auction of official gold by the U.S. Treasury was praised by London gold dealers as being timely and highly contributory to a more stable market. Some fear, however, that should a single bid for the entire 2 million ounces be forthcoming, prices might increase rapidly, possibly as high as $250 an ounce. They anticipate major impact of U.S. ownership will be the formation of a sizable gold futures market, but rather small demand for physical holding of gold other than coins after a brief initial surge following deregulation. And then they have another part here which I've brought up for you. It says, to the dealers' expectations. These are the dealers that basically are still around today. They're the LBMA bullion bank dealers, right? It says, to the dealers' expectations will be the formation of a sizable gold futures market. Each of the dealers expressed the belief that the futures market would be of significant proportion and physical trading would be minuscule by comparison. So there you go. Back in the day when Jesse Livermore started out, he traded in what was called bucket shops, where he bet on the price of stocks, and he actually never bought or sold the certificates, the real stock, and it was just a betting place for the price. And this is what the COMEX and LBMA have been for 50 years. And I've spoken about this before. I'm going to try to find the video and I'll put it up here for you. So also expressed was the expectation that large volume futures dealing would create a highly volatile market. In turn, the volatile price movements would diminish the initial demand for physical holding and most likely negate long-term hoarding by U.S. citizens. So that's what it's all about. They don't want you to hold physical gold nor silver. But unfortunately, for the central banks, for the treasuries, for the bullion banks who are agents of the central banks and treasuries, this game is up. And yes, we've tried as retail to kind of bring these people down, but we shouldn't kid ourselves. We're too small for it. The people who are doing it are sovereign countries like the BRICS, like the Gulf Cooperation Council countries, like the Middle Eastern countries. They're the ones who are putting an end to this. And I'm not surprised, because other countries, even NATO countries, have been pushed around by the Anglo-American financial military empire for too long. Anyway, it says here, as to future demand by U.S. citizens for gold, most dealers did not foresee demand for physical holding as significant, with the exception of initial surge during the first 2 to 3 months of the year following deregulation. They did not feel that U.S. citizens on the whole were psychologically prepared to switch from small-scale gold coin purchases to large-scale long-term bullion hoarding. Several expressed the view that the demand for coins after the initial surge would most likely be such that it could be met from within should the US decide to mint gold coins for such purposes. So there you go. So what's going on over the weekend? Well, there's talk now that, the COMEX has raised margins for precious metals contracts, not just silver, but also for gold. And I think what they're trying to do and what they think they're going to do is going to stop silver going higher, because the bullion banks are desperate. Their game is up. But I've got a post here from Dario on X. I've had him on 2 or 3 times, and he's been following silver very closely. And this is what he says about the margin hike over the weekend. I am personally surprised that COMEX announced margins on silver futures will go up around 10% on Monday, since such a move hurts those who are short significantly more compared to those who are long and holding deeply profitable positions, as it is the case right now. FYI, the last time CME hiked margins around 10% was the 12th of December, when silver traded around $64. Furthermore, it isn't leverage and futures speculation driving silver prices higher this time, but demand for physical silver in an unprecedented supply-constrained environment, mostly from Asian manufacturers, and futures have no alternatives but to follow the spot price, as explained before. Considering the above, I don't think this move by the CME is an attempt to contain or crush the silver price. Also because margins on all other precious metals, including gold, have been hiked. But a move by the CME to protect itself and other clearing participants against the risk of being on the hook to cover the losses if a large single short seller blows up, similar to what happened to Melvin Capital, Archegos, and others that wildly shorted GME 5 years ago. As a matter of fact, when CME of course owns COMEX, announced this hike in margins, the market was still open for trading on Friday. In that moment, silver prices jumped and ended up closing even higher. This signal positions from the short side were taken off, not the opposite. So there you go. I thought that was very interesting. I've got something else here, and this is off Zero Hedge, and Vince Lancy posted it on X, and I reposted it, and I said the following: good analysis of what is happening in silver. As I've said many times in the past, COMEX and the LBMA are bucket shops. Shanghai is where the real market for gold and silver is from now on. So Zero Hedge says a rolling physical squeeze. This is not a single short squeeze event. It's a rolling physical squeeze. Pressure migrates across venues and products. ETF premiums distort, futures reprice, swaps widen, physical premiums persist. No single market needs to fail outright for stress to compound. And here's the important part. Decades of financialization transformed silver into a paper asset optimized for balance sheet efficiency and arbitrage. That system relied on the assumption that delivery would remain exceptional. Well, it's not exceptional anymore. We had a record delivery for December this year on COMEX of 63.5 million troy ounces of silver, or 12,707 contracts, silver contracts. That assumption is now being challenged simultaneously from multiple directions. China's premiums, ETF instability, and official signaling are not the cause of the move. They are expressions of it. The constraint lies in London's ability to intermediate physical demand at scale. The can has been kicked for decades. The road it is rolling down is now visibly finite. And I saw that Asian guy is a new guy on YouTube. He's got an interesting channel. And he reported that there was 17.25 billion of repo issued by the Fed yesterday. And he thinks that's to keep the bullion banks going because they're in trouble. But the other thing he said, and I agree 100% with him, is that it doesn't matter how many trillions the Fed can print. As long as they don't have the physical silver, this situation is going to get worse. So where do I think the price is going? Well, it's going a lot higher. And I can't tell you where, but I think it's going to shock the world. And there are going to be a lot of people who have no idea of what's going on, who are going to try to take advantage of what they think is a parabolic squeeze. And they're going to try to short silver and buy Bitcoin or whatever. And I think they're going to get hurt. And that's the other thing. I don't leverage. I'm holding on to my physical silver. I'm holding on to my miners. Yes, they underperformed, but they're going to come on board of this massive rally that we've had in bullion. And yes, one thing I always try to tell myself is, do I really want to get rid of my physical gold and silver in exchange for deposits in these corrupt banks? No, I wouldn't. Of course, there are exceptions. If you need to cash in or to liquidate some physical gold and silver for an emergency, go ahead and do it, especially if silver is trading at 150 or 200. But what I'm trying to say here, by holding gold and silver, you're holding real money, and unless you need to spend it, I would hold on to it. That's the way I see it. The miners is a different game. You need to give yourself targets and make sure you take profits. I'm not going to tell you when you have to take profits. I still think there's a long way to go. The miners, according to Peter Spina of GoldSeek, he thinks the gold and silver miners, or the silver miners, excuse me, are still priced as if silver was trading at $30. So even if silver were to drop back to 50, they'd still be undervalued. So I think it's going to be an interesting week, this coming week. So today, as I said, it's the 27th. So we're going to have the 29th, Monday, 30th, Tuesday, and the 31st on Wednesday. And I expect, of course, the 1st of January will be closed. The 2nd will be open Friday, but it will be relatively quiet. But we could have fireworks. And I think gold is ready to join the party. Gold has been part of the same paper scheme as silver. It hasn't been as pronounced, but it's also massively undervalued. So pretty soon we're going to find out what the real price of silver and gold are going to be, really. And yeah, with that, I'm going to wish you all a very good weekend. Take care. Bye.